Hello, everybody, and welcome back to Escambia Empires. This is episode 40, and we are excited to have on Joe Kimball this evening. Joe is a mortgage lender, and we're having him on. I met him a few weeks ago, and he deals primarily in reverse mortgages. So for anybody who's not interested in deep kind of loan talk, maybe this isn't the episode for you, but he is able to explain it in a way that the laymen such as, Danny and myself can understand, just the average people. So when I was talking with him, I was like, this would be a great idea for a podcast episode where we can talk about something that maybe most people don't know anything about. I'm in the industry and I didn't know anything about reverse mortgages. So it was a good episode. We kept it short and as aerial, over the top, view as we could without getting too deep into it. But we wanted to just be able to have a place where, if somebody is curious about it, they can come learn about reverse mortgages from somebody who's, the best in the business. He's been doing this for a long, long time, and now he only does reverse mortgages. So go ahead, Dan.
Well, I was just going to say, he explains it very thoroughly. Definitely, like Mike said, you'll understand it. So even if you have no idea what reverse mortgages is, when you're going into this episode, don't move on before you hear about it. It's a shorter episode. He explains it thoroughly. You'll definitely want to be informed of what it is.
Yep. Sounds good. Without any further ado, here is our interview with Joe Kimball. Joe, welcome to the podcast.
Thanks so much, Michael. It's my pleasure. Thank you for having me here.
Yes, absolutely. Yeah. I'm excited about this. So one thing that Dan and I were talking about prior to this episode is just trying to have people on who can explain potentially complicated topics that the guests are familiar with, and hopefully you can convey that in a way that anybody who's interested can understand. So we figured we'd start that off by having you jump on and talk about reverse mortgages, because that's kind of that's what you do. Exactly. So for those who don't know who you are, go ahead and just give kind of a brief history of what brought you to Pensacola and your history, your career in lending, and then we can go off from there.
Okay, great. Well, so my wife and I moved to the Emerald Coast area from Southern California just a little less than 2 years ago. We raised our family there in Southern California. It was a great place, but as things changed, it became very, very expensive. And our kids all moved out of the state because they couldn't afford to raise their families there.
Wow.
And so we looked at ourselves and said, well, it's nice here. We love the weather, but our friends are leaving. Our kids have left. Where do we want to live? Our kids are we're all in four different states, 3 kids and us, 4 different states. So when they all went to different places, we decided, where do we want to live? And we call ourselves lizards. We like warm weather. I love to sail. We've sailed throughout the Caribbean and out of Florida a lot. And so we drew a line across and said, anywhere south of that, from Southern California south, that doesn't leave much.
Yeah.
So, Texas and Florida, and that's about it. So we started searching, and I had some friends here in the Emerald Coast area. They said, hey, yeah, come visit. You'll love it. So we came here, made about 4 different trips, spent a week or 2 each time, and just checked the area out and said, yeah, we'd like to live here. So bought a home in Navarre. We live on the water there, and
very nice.
That's where we live now.
That's great.
Before the bridge went out, it was an easy trip into Pensacola for all the cool stuff downtown and everything.
Yeah.
So.
Now, how often now with the bridge being out, do you do? I'm assuming you do business in Pensacola. Yeah. Do you have to come here often?
I'm here once or twice a week.
Okay. Gotcha.
And so it's just a longer trip around, but
yeah.
I love it. And
not quite as bad as having to do a daily drive.
That's right. Yeah, exactly.
Oh, man. Well, that's cool. I know we had talked about, how it's kind of uncanny how hurricanes often go one way or the other and miss Pensacola.
Yeah.
And I always joke with Dan about, his welcome to Pensacola was Hurricane Sally.
Yeah.
And you've got some interesting sailing stories.
Yeah, I did. Well, one of the reasons we also homed in on this area is we looked at the history of hurricanes, and they seem to always bend east or west, and not many of them hit here. And so welcome to the Emerald Coast, and bam, a direct hit.
Yep. That's exactly
hopefully
how it was
for me too.
Yeah, hopefully we'll have another 15 years before we get something bad.
Yeah.
But, we'll knock on wood for that one.
Yeah, but I helped a friend of mine sail his new catamaran from Fort Lauderdale to Panama, and on our way south, he was a rookie sailor. I've sailed all my life since I was 7. And there was a hurricane crossing the Caribbean, and you just don't take chances, right? You're in a boat, you don't take chances. But he's like,
At least you shouldn't take chances.
Yeah. It's his boat. No. You know, it looks like it's bending north. It's going the opposite way we are. We're going to be fine. So let's, all the trajectories have it going north except one. Well, it went the way of the one.
Except one.
Of course.
Oh.
And so we sailed his brand new catamaran through a hurricane.
Oh, no.
And that was a frightening experience.
Oh, yeah.
Yeah. But we made it. Only casualty was one of the crewmen, a good friend of mine, who's actually the pastor of our church, coming on the trip with us. He was making dinner in the middle of this crazy sea, and he dropped the knife and went right through his foot.
Oh.
Yeah, pinned his foot to the floor.
No, it did.
Yes.
With that much force.
Yes.
That's
And
incredible.
so we went into Cologne. When we finally got to Panama, we went into Cologne and had him cleaned up and sewed up, and he's fine today.
Wow, that's
that
not
was
something many people
the
can
only
say.
injury, yeah.
He said the only casualty was a pastor, and I was like, oh, that's okay. No worries.
No, his foot.
Yeah. Oh, man, that is
so
really...
that's my hurricane story.
I feel like after something like that, you got to feel just a little bit like you're on borrowed time to some degree. I mean, oh, my goodness. Well, okay, having said that, so go ahead and give an overview. I know I was really interested also to hear about your business that you had started when you were 19, I think it was. Go ahead and give us an overview of your professional career as well.
I'll be really quick about this then, if you want me to go back to 19. I started a trucking company when I was 19. I was in high school. I thought all my friends were getting cars for their birthdays and everything because that's what they said. So I went to my dad and said, hey, Dad, my birthday's coming. Yeah. Do I get a car? And he said, yeah, if you want to buy one, you can have a car.
That's exactly what my parents said. Yep.
And I'm like, well, my friends are getting them. And he said, I'm sorry for your friends. You're going to work for one.
There it is.
Wow.
That's one of the best gifts he gave you, I'm sure.
And so he said, I'll help you qualify for the loan. So I bought a van, a 1972 Chevy van, and I started a delivery service after school. I'd go around calling businesses and ask them if they needed stuff delivered, certain types of businesses that needed stuff delivered. So I was a early Uber for business.
Interesting.
Very nice.
Yeah. And so that grew into, I ended up buying a truck and hired some of my friends in high school, grew into more trucks. And I eventually, when I graduated from high school, I sold the business, thought I was a millionaire. I think I got $50,000 for it. And I thought, man, I can retire.
Which, I mean, $50,000, that's not a small sum of money.
Yeah, when you go to Hawaii
Not at that age.
and live like you're a millionaire, it goes really fast.
I'm sure it does. Sure it does.
So I came home and said, hey, Dad, can I move back in? And you know that job you offered me at your furniture manufacturing company? Could I maybe
Take it back.
take you up on that?
Yeah.
So I went to work for my dad. We built a business together, built it from literally out of his garage into a manufacturing company. We shipped all over the country. And that was my second business that he and I sold together. So he retired. I kept working. In my second retirement, I learned from my first one, don't blow it all. And I was married and had a young child. So that affected the decision.
Yeah, it's a little more
I started looking
responsibility.
around, what do I want to do? And I'd always loved real estate, but I never wanted to work 24/7. And so a friend of mine said, who happened to be a branch manager of a local savings and loan, he said, come into my office. I got extra desks. I'll teach you the mortgage business. I'll show you the mortgage business. If you like it, I'll hire you.
Mm-hmm.
And so I went in there first day, tie on, all ready to go. And I said, well, I'm here to learn. And he's handed me some business cards. He said, they were blank. He said, write your name on there. And here's a rate sheet. Go out and call on some realtors and get some loans. And I'm like, what's
You don't even know anything. Yeah.
And unfortunately, that's the normal training for the mortgage business. Well,
really?
Yeah. So I had always been a pain in the butt kid for my parents, I'm sure, because I always asked questions. I always wanted to know why and how come. And so, yeah, Dad, but why? But why? Why? Mom, why do you want me to do that? Just do as I tell you. But why?
Mm-hmm.
And so that's been my bent. And so when I got in the mortgage business, I was the same way. Like I understood what the debt to income ratio is. Well, why? Who picked that number? And why is that significant?
Interesting.
So I learned, like I read all the guidelines. Most loan officers do that. But my boss told me, read the guidelines. If you don't have anything to do, read the guidelines. So I did. And I learned that there are ways to get around them. And then I ask questions like, well, okay, so I know how to get people into houses that maybe they shouldn't be in because it was too expensive for them. How does that affect families? So it just led into a lot of things. I feel like I am much more, I could get people in trouble, and it gives a bigger responsibility to make sure that anybody that I would qualify for a home loan understands what they're getting into. And
Yes.
so for 30, I've been in the mortgage business for 35 years. For 30 years, I was in the purchase conventional lending market. And as I continued to age, I noticed that all of my friends got gray hair also. I don't know how that happens. But just,
Yeah. Danny doesn't have to worry about that.
Yeah.
Yep.
Well, I always say what isn't turning gray is turning loose for me.
That's exactly right.
That's what I was worried about.
Oh, man.
So I decided to transition into the reverse mortgage business. I had some reverse mortgage loan officers that worked under my supervision, and I decided to go back. I managed for most of those years in the mortgage business. I went back into production and into reverse mortgages, trying to help senior citizens understand how to get to the end without unbearable financial stress. Because I think that the best efforts of most people are they try to save for, college for their kids and retirement, all the things, and have some fun. And so, but what we were told when I was planning for retirement is that, everybody forecasted an 8.5% average return on investments for your invested funds. Well, what's actually happened over that time period is about 4.5%. And then when I was younger, when I was your age, life expectancy was about 72. Well, it's 85 now. And so you have lower returns over a longer period of time. And it wasn't negligence that got many people into the situation. It was just, that's what we planned for.
Yeah.
And conditions changed. So along in the 1980s, the reverse mortgage product came out. It was by a financial institution. It was just a private loan. And at the time, it was more of an equity share transaction than it was a straight mortgage transaction. So they did have an ownership interest in the property in the original reverse mortgages. In the 1980s, it was actually Ronald Reagan in 1985 directed Congress, because of the growing number of senior citizens, directed Congress to look into the reverse mortgage product and see if it could be made into a federally insured product. So FHA took it on, and in 1988, they started the first FHA government-insured reverse mortgage. And at the time, it was very loose. It was kind of like the stated or the no-doc deals that got us into the 2008 mess. We didn't look at any financial information from them. We didn't care about credit. We could get a person that was in foreclosure on their property if they were 62 or older. So this product, I should back up a minute. The reverse mortgage is targeted. You have to be 62 or older. That's the first eligibility requirement for it.
That.
Yeah.
So for the seniors, if they found themselves in a mess, we could just pretty easily. All they had to do is get an appraisal and show enough equity, and we didn't look at their finances, we didn't look at their credit, nothing. And so what happened over time is that those seniors got back into a mess because we never addressed the root cause of why they were where they're at.
Yeah.
So in 2011, 2013, and 2017, Congress passed a lot of rules requiring a financial assessment. So today we actually have to look at income and make sure that after we give them this reverse mortgage, that they can still afford to pay the rest of their bills.
Sure.
There are credit requirements, and that you have to have been on time with all of your housing payments for the prior 12 months. If you weren't, you're not eligible.
Really?
Because that's an indication that you can't even afford your house. And so rather than postpone that, let's deal with it now. Let's introduce them to somebody like you that can help them maybe find a house that they can afford to stay
Yeah.
in, and then use a reverse mortgage to purchase that house.
Okay. Well, that leads perfectly then into, and again, we'll try and keep this as digestible as possible for people on audio. But go ahead and give your best explanation of what a reverse mortgage is. We've heard some of the qualifications. But.
Yeah. So a reverse mortgage is very similar to any other loan on the marketplace today. It's an FHA insured mortgage, and the primary differences are you have to be 62 to qualify. And it has to be your primary residence, so it's not available for rental properties or second homes or anything like that. And payment is optional, so you don't have to make a principal and interest payment. You do have to pay your taxes and your homeowner's insurance, but you no longer have to pay a principal and interest payment. So you can if you want, but you don't have to. And so the reason we can qualify more seniors is when we qualify them for a home loan, we don't hold a principal and interest payment against them. And we have a residual income requirement, but if they meet their fixed bills plus the residual income, the residual income is designed to make sure that they can afford to buy clothes and food and pay their other bills. They can be 100% with their residual income of their fixed income. So it's a more in depth than the normal qualification in that we do look at some of those other expenses and make sure that they can afford those.
Okay. Sure. Okay. So every month, and for those who don't know, every mortgage payment that you make on a regular mortgage, you're paying your principal, the loan balance,
right,
and your interest, and then the taxes and insurance.
Right.
So you said you don't have to make a principal and interest payment if you don't want to.
Correct.
Why would someone want to do that, and kind of what are the benefits of that?
That's a great question. So you don't have to, and what happens, every loan has interest on it, and so if you have a conventional loan, you have to pay the interest out of your checkbook. On a reverse mortgage, if you don't make the interest payment, it adds to your loan balance. So you're making the interest payment out of your equity. So it's the same money because rates are very similar. They're almost identical. So you either make the interest payment out of your checkbook or out of your equity. If you go ahead and make the payment, then one of the features of a reverse mortgage is it's got a line of credit attached to it as well. And so what that means is as your property continues to appreciate over time, so does your line of credit grow, and you can access more and more of your equity as you age without having to go and requalify for a loan.
Gotcha.
Yeah. So every time you make a payment, it increases your line of credit. Not only does it pay the interest, so it does pay the interest and you can deduct it then, but it also adds to your line of credit. And so you can reborrow it out in the future if you need it. So you pay it today, grows your line of credit, and you can borrow it out in the future should you need, assisted living or some medical expenses that insurance doesn't cover. You need a new roof. You can pull it out for anything you want. There are no qualifications on what you can use the money
Wow.
for.
Really?
Yeah.
Wow. Okay.
That's very useful.
So you're building an account for yourself. And again, anytime you pull money out, it's tax-free because it's equity. It's not income. So it's for those that are using it as a tax planning tool. And let's say you can afford your house payment, but you're thinking of the future, and I want to build a reserve against down markets so that I don't drain my retirement accounts in a down market. So instead of taking, let's say you're retired, you've got a 401k, and we're into a bear market, and the market is going down. You do not want to take money, if you don't have to, out of your retirement accounts in a down market because the value is down, so you're pulling out more units to produce the same monthly cash, if that makes sense.
Yeah.
Okay, so you don't want to do that. So you can take the money out of your reverse mortgage line of credit instead of out of your 401k, maintaining your 401k balance and just using your equity line until the market turns back around again and it starts growing. So you can use it to manage your finances.
Interesting.
Yeah.
Yeah, I like how many different options there are.
Yeah.
So you're saying for somebody who pays, if you pay, it not only does it pays down your principal and your interest, so increasing your equity, and it also increases your line of credit.
Correct.
So what if then you don't pay the principal and interest? What does that do?
Your loan balance grows. So the loans are designed the way. It's okay. I'm trying to make this simple. It's complex.
And also, Dan, if you have questions about any of the terms or anything, I'll assume that the people listening do as well.
Yeah.
Sometimes like he's talking, I'm like, yeah, I understand that, but I want to make sure
every
you do
question
too.
I've had, you've asked, you've beat me to it. So it's been working out really well.
Very good. So how much of a loan do you qualify for? It's not like a conventional loan where, it depends on how much you want to put down. You want to put 3% down, 5, 10, 20, 50. You can do anything you want. On a reverse mortgage, because they assume that a homeowner is never going to make a payment and the interest is going to accrue, right? They want to make sure that you're not going to eat up all of your equity through to life expectancy. So the way you calculate the loan amount is based on the property value, the interest rate, and the age of the youngest borrower on title. Because let's say there's somebody 62 and their life expectancy, let's say they're a female and they're 86, right? So they've got 24 years of interest to accrue, right? So the lender doesn't want it to go upside down.
Yeah.
So they want to make sure that by the time you reach life expectancy and your value has gone up at the same time that your mortgage has gone up, there's still equity there.
Yeah.
Sure.
They don't want to be upside down. So that's why it's hard to determine how much of a loan amount you can get unless I know those variables. What's your age? What's your property value? And what program do you want? Do you
Need
want
to
a
plug in some
fixed
numbers.
interest rate or an adjustable interest rate? And then you can calculate how much of a loan you can get.
Gotcha.
And I forgot what your question was. I'm sorry.
I think it was asking so essentially, and just how I have understood it and how you explained it to me is, if you're not making that principal and interest payment,
That's right.
yeah, it increases your loan balance,
Right.
but you're keeping that cash on hand.
Right.
And so there's a graph that you showed me that we'll put up on the screen for anybody who's watching. But it's basically you're either paying out of pocket for your cash that you could use for clothes or necessities or whatever, or you're increasing that loan balance. So the money obviously has to come from somewhere, but if you don't want to make that payment, you don't have to, in order to keep cash reserves for yourself.
So let me run through that graph that you're going to put up just quickly,
Go
because
ahead.
it was an actual case that I had worked on. And so this couple was preparing for retirement. He was 65. He was debating whether he works till 70 or retires now. And his financial advisor sent him to me because his plan had him depleting his cash down to zero in 16 years. Well, he's going to live longer than 16 years. And so his financial advisor says, no, you got to keep working until you're 70, or talk to Joe and see if there's a solution. So what I did is I created a graph and I showed him, so if you keep your conventional loan and continue to make payments and retire, here's what's going to happen. Your cash over the next 16 years is going to go down to zero. And because the principal portion increases your equity is growing. But because in the simple case, your net worth is the sum of your equity and your cash. Now, I know there are other things, but if we set those other things aside, because they're going to be the same whether you have a reverse mortgage or a conventional loan, and just look at cash and equity. So he's depleting his cash and growing his equity. Well, in 16 years, he has no cash left. And so he's got to sell his house, his equity,
To cash in.
because he can't afford to live.
Yeah.
And so there's a different way to take those same monies and make it through to the end without any financial stress. And that is with a reverse mortgage, he can stop making the house payment out of his cash balance. So his cash never depletes. When you look at this chart, you'll notice the green line is the cash on both sides of the charts that you're going to show. The green line is the cash. And so in a conventional, you'll see it's running down to zero. And on the reverse mortgage side, it stays pretty constant. It still goes down, but down much less slowly. He makes it through to retirement without running out of cash. And then you'll also notice that on the conventional side, the equity grows because you're paying it down every month. But on the reverse mortgage side, the equity is static and slightly declining because the loan balance grows. Therefore, your equity goes down. However, your property continues to appreciate, and that's why it doesn't go down as dramatically. But the most important thing, the purpley colored bars are net worth. And you'll notice that the net worth is nearly identical because you're either going to use your cash or your equity as you go through.
Yeah.
Once you get into the withdrawal portion of your assets, your net worth, it's going to go down. Something is going to go down, either your cash or your
Because you're
equity.
using the savings that you've been putting aside for that exact purpose.
So something's going to go down. It's better when you're older and you have less ability to replace cash. It's better to preserve the cash.
Yeah.
Use your equity. Your heirs are going to inherit the same net worth. So a lot of people think, oh, but I want to give my house to my kids. Well, do you really want to give your house, or do you want to give proceeds?
Exactly.
And so one way you're going to give equity and no cash That is, if you maybe you'll move in with them after you deplete your cash in 16
Maybe
years.
so.
And so you'll give them your equity. Or if you get a reverse mortgage, you'll give them less equity and more cash. But the total is going to be the same either way, or very close.
And the total is pretty much the same either way, and you have cash reserves in the case of you know, emergencies, for all the reasons that you would need cash
Or
for.
you want to help your grandkids out.
Yeah.
You know, your mom and dad can't afford to pay all of the school costs, but the kid wants to go to a certain school, and if you have cash, grandparents can bless them.
Yeah.
You know, here, let me send you $500 a month while you're in college. Or,
Boy, that would have been nice for me.
Yeah.
Maybe I would have stayed in college longer.
Well, it's a great planning. It gives options, and that's what I try to explain to people. You got to open your mind up, because this gives you options. We're given a certain amount of assets, and we're supposed to be good stewards of them. And so, what does that mean, being good stewards? It's different for everybody.
Yeah,
that's true.
But there are ways to arrange your assets so that they not only last, but they can be used to help people also.
I really like this. I was just going to say, as a summary, for me, in my mind, this just seems like a much more useful tool than a normal mortgage would be. You know, a normal mortgage is just to secure a house that you can appreciate and over time sell and cash out, like we talked about. But then this gives you many more options in those years where you have less to work with. That's interesting.
Potentially. Yeah, and like you said, depending on the situation, you know.
Yeah.
So
if you invite me back for another episode, I will tell you how although you can't use a reverse mortgage to finance a second home or a rental property, you can. There are ways to purchase second homes or rental properties without increasing your monthly fixed payments. But you'll have to learn that.
That's interesting. Yeah, stay tuned for the next episode.
I like
that's
that.
really, as soon as we finish here, I'm going to schedule something with you, and we'll get you back on for another one. Because I feel like I had just said, I think it's so valuable to be able to have someone on who can explain specifically one topic. And then that makes things easier too for anybody who's searching. They can find something like this that maybe explains it. So, all right. Well, Dan, you're our meter here for.
We're right on track. We got 2 minutes left. So
good. Okay.
Perfect.
Well, sounds good. I love it. Do you have anything else that you want to say to the people?
Yes. First of all, in thanking you, but also as I've met you and you came referred to me by somebody that I highly respect. If any of you out there are looking for a realtor, this is your real estate team, because there are a lot of great realtors. I've worked with a lot of them over the years. One of the things that I value most is people of integrity, that their highest goal is to meet the needs of their clients. And I've learned that about you, but I've also heard that about you guys. So
I appreciate that very much.
Yeah.
Thank you.
That's
And we'll slide you a 20 after the show for saying that.
No, I want people to make their way to people that are really going to care for them and do a great job for them. So,
well, same goes for you. This is the second time that we've talked, and I really have enjoyed getting to know you, and I'm glad for Charlie. Thanks. Shout out to Charlie Kuderna for hooking us up. So I love it. Well, I appreciate you coming on, Joe, and thank you for explaining it so we can understand those of us who aren't in this every day. And again, you're the meter. So as long as you're good, then I'm assuming everybody else is.
Yeah.
All right. Thanks, Joe. We'll have you on again soon.
Joe.
All right.
All right. So for those of you who stuck around to the end, I applaud you. I know that was a little bit deep, but again, I think you did a really good job of dumbing it down. So those of us who don't understand it can understand it.
That's right. Well said.
So I just lost my train of thought. So Danny, wrap us up.
No, I really enjoyed listening to Joe, and I hope you did too. He's very down to earth, and it obviously comes through in the episode, like you heard. He sums it up, and he will be on in the future episode. So keep an eye out for that, and he'll kind of explain how you can use it as an even more efficient tool for passive income and things like that. I really like him, and feel free to hit him up and connect with him. We'll have his links for his profiles, his social profiles, in the description. So just make sure that you check him out.
Yep, and he even gave us a nice little shout out at the end.
Yeah.
Said some really nice things about us. So if you're still here, we appreciate you for listening. Something that helps us out tremendously is if you go rate us on iTunes or Spotify or wherever you listen to podcasts. That kind of helps get us out there and push our content.
Yeah, and just to disclaim, we try not to highlight that very often.
Yeah.
But we're throwing it out there every now and then just so that you're aware of it. If you do enjoy the podcast.
Yeah,
like
we
you
don't
said,
like
it
people to
helps
feel
us.
like we're pushing too hard or trying to sell you on anything, because we're really not. But
it's still a fact.
Yep,
so we
100%.
wanna address it.
If this helped you or helped you understand maybe a little bit something that you didn't know before and you think somebody else should know, go ahead and give us a share, give us a like, whatever it is. Again, appreciate you for listening, and we'll see you on the next episode.